Hi, welcome to our midweek Forex forecast. My name is Jay Norris. As always, we need to remind you trading Forex is a risky endeavor and not suitable for all investors. These are real-time market snapshots and may not be replicated going forward. I am Jay Norris. I've written a couple of books on trading which serve as the textbooks for our courses at Trading University, where I am the director of education, where I spend a considerable amount of time teaching and demonstrating the art of discretionary trading in live markets. Here's our website right there. If you want to go to our market commentary, you can go to our video page, YouTube, and you'll see this video among others. Let's get to the charts. Australian US dollar, first major we're going to cover. What can we say? The Australian dollar looks good, looks strong. You can see you have those three very important tradable patterns up the primary, the secondary, day to day. We like that. That's a market that you look to buy dips in intraday. There's no doubt about it. This market's cool because you can be approaching it from the long side, whether you're a position trader, swing trader, or day trader. You have everything aligned. Yeah, there is some resistance up ahead here that we have to be mindful of. But the way this market's coiled up and aligned up here, if you get it going just a little bit higher, if you can get it above that 106, I think you hold out hopes for actually a new high on the year. Believe it or not, I mean, it's looking like that. Overall, it does have a sideways bend to it, but you get in a market around December where you think, oh, it's going to be slow, it's going to go sideways. Sure, that is a possibility. It's well supported on the dips. You have a nice pattern of higher lows here. At the same time, you look on the other side, you have lower highs up above, and that's why, I'm kind of leaning towards sideways. However, you can never rule out in markets that you could see a squeeze one way or the other. And from my perspective here, with the patterns aligned bullish like that, the surprise would be on the upside, would be a squeeze to the upside. And when you look at that possibility of a move beyond 106, 108's not that far away. You could still punch out a new high for the year in the Aussie, is what I'd be thinking. We'll have to see. Next market would be the Euro US dollar. Not that I'm bullish on this market, the Euro US dollar, because the primary pattern is still down. On the other hand, I'm not bearish either. You could see that day-to-day pattern was up. As an intraday trader today, as a day trader, in our master's course, we actually were pretty bulled up on this guy intraday. So longer term, you have primary resistance there. You're getting pretty close to that. In our book, the only time you really pay attention to long-term structures, the closer in proximity you get. It becomes more relevant the closer you get to it, long-term structure, from those higher time frame patterns. And looking at this, though, that's a pretty good formation you have going. That secondary's up solid. That day-to-day's up. Look at the day-to-day pattern. Has good momentum to it. Look at the MACD down below that momentum indicator. Pretty good momentum here. Here's another one where you have to realistically, if you're a trader and you're assessing the risk on trades, if you short this guy, you have to say, well, there's the possibility it pops above that late summer high, that September high, and there's another one that can go for that February high, and that leaves it not that far from a new high for the year. So all the bad things we've heard about the euro, as a trader, assessing both sides of the market, you'd have to see that there's the possibility of that. Interesting, the majors were kind of on the back burner because we were focused on those yen pairs, but the majors very much right back on the front burner. This is going to be something. That being said, though, let's take a look at your S&P 500. This to me would seem more of a bearish setup right now. Focus in on that than not. In that day-to-day pattern is still down. You had an opportunity here for the stock market to take out that significant level, and it couldn't. So the day-to-day held. The big story is who's going to be the alpha market in December. Is it going to be the S&P 500 as it was most of the year, or is it going to be the yen pairs, that dollar yen, as it has been for the last couple of months? So that's the big story. That's the big question in my mind. The stock market going to try to resume that alpha roll, or is it going to loosen up here and correct down? Wouldn't mind another test of that November low, shake things out. Or is it going to be the yen pairs? And let's go to the yen. And the yen pair has been the dollar yen, Aussie yen. They've been the alpha pairs. Now the upside, they've been the leading markets on the upside. and they've actually swung the majors higher with them also. So that's the big question to me. So we'll have to see what the yen gives us. Now, so far, it's just been a very shallow correction so far. We'll have to see how that plays out. And really, that's the question. Does dollar yen stay the alpha market? If it does, I think it takes the majors higher with them, the euro and the pound potentially too, and the Aussie. Or will the stock market back to the S&P 500 try to resume its alpha roll? Which, it's not looking very bullish here. Yeah, I know the primary and the secondary are up, but it rejected that day-to-day pattern. So you got right up there. You got to 14 and a quarter, and it got knocked down. Now that doesn't mean it can't come down and set itself up again and post another higher low. In fact, that's what I'd be looking for, another higher low, perhaps somewhere in here in the stock market. And then they get it going on the upside. But we'll have to see. Back to that euro, you're real close to that summer high, and I can tell you there's probably going to be stops up there. So call me crazy, but I think there's a possibility. I think you hold out for a higher high potentially for the year in the Aussie, and if you get that, the euro may just give a run for its money too, and that could mean you clear out a lot of buy stops above 132 and potentially even above the 2012 high, closer to 135. So going to be interesting. Hey, thank you very much. Once again, if you want to check out the site, there you go, trading-u.com. You can go to market commentary and see some of our other forecasts and some of the other things we've written and our observations about the market. And you can definitely go to education and sign up for some of our demo programs. You can sign up for our Thursday live market analysis session where you can see us demonstrate the techniques we teach in live markets on those intraday time frames. Thank you so much, and we'll catch up with you again for the weekly wrap-up.